It's very interesting actually of how India was just 20 years ago to where it is today and where it's going to be in the next 10, 20 years. As India is moving now from this low income, mid income developed country, funds, the Blackstones and the Brookfields, the LPs of them coming in, getting more comfortable to deploy capital directly in India.
When I speak to our members based in London or New York or other countries, they always talk about India and they feel very curious about India. They want to understand what's going on in that market, why it's such a growth. They always talk about Mumbai, Delhi, Gurgaon, but one of the most exciting markets here in India is Bangalore. And I'm here today with Aditya from Embassy Group, one of the most exciting companies in the country. And I thank you for the opportunity of, talking to you, understanding more your thoughts and your vision for India, talking about Bangalore, but other cities in India as well. First of all, thank you very much for being here. Can you tell us a little bit more about Embassy for those that don't know Embassy?
Yeah, thanks for having me, Gustavo. Embassy has been a real estate developer in India for the last 4 decades, focused on commercial and residential. I would say the last 2 decades, we've focused more on commercial. People know us for an office developer, largely focused on Bangalore. We did the first REIT in India in 2019 with Blackstone. And a little bit before that, we did the first private equity deal with Blackstone in real estate in the country. 2011, 2012 is when that journey started. Since then, it's been a beautiful journey building out office with them. And as a company now, we're actually focused on both residential and office. This is where we see the opportunity in India. This is where we see, massive growth that the country can offer. And we're very excited because we feel that it's just the start of what's the future of India.
When we think about the pace that things are happening here in India and how strong the market is, we also associate that with a lot of institutional investors and family offices from Abu Dhabi, Dubai, also some Japanese private equity firms that are deploying capital here. Some of them that are not here, but at the same time, they feel that they're unsure on how to navigate in such a market.
Yeah.
Very complex.
Yeah.
And we were just having a coffee before this conversation, and you were mentioning the level of maturity that you see growing the market, and you talk about your own company experience on how this relationship with Blackstone, for example, that from 15 years ago, pretty much, how much that was useful for your organization, but also for the market as a whole. Can you elaborate a little bit on that?
Yeah, I mean, look, if you look at India 20 years ago and the way my father grew the business was so different to what it was today. It was financed off plan. It was largely HNI investors, domestic investors who would finance it and basically just sell area so you can build the building and the developer would be left with some equity in some area that'd be left. And then usually they would also strata sell that out and churn the capital back into new growth. That has changed quite a lot. As these large funds have come into India, gotten comfortable. By the way, some of these funds have come into India and for 5 years did nothing. They just watched. Blackstone is a great example of that. Understood the market really well before they got comfortable to deploy money, and also picked the right partners to deploy money with. Now you're seeing a massive institutionalization of India, where you're seeing much bigger ticket sizes, you're seeing much better quality of assets, much better quality of tenants, and developers are using that to finance the projects much differently. You either bring in a large-scale partner day one who maybe even puts in majority of the capital, and as the developer, you bring in your expertise of operating in the country. Greenfield in India is not so simple. And I think that's why some of these large funds have leaned on working with the local partner just so that you can complement skills and executing these large projects and, eventually either holding them, doing their own REITs, we've done that, or building it out and, basically selling it to large institutions, perhaps a REIT, perhaps a sovereign fund. So it just changed. The dynamics of it has changed so much from that HNI private investor to now institutional investor who's holding these assets and the financing of it in between. And honestly, it's a trend that you just can't fight. It's going to keep happening. It's happened in all developed countries. As India is moving now from this low income, mid income, developed country, it's just going to continue happening. You're going to see more REITs out there. You're going to see more of the LPs into some of these funds, the Blackstones and the Brookfields, the LPs of them coming in, getting more comfortable to deploy capital directly in India. You're still going to see that success of the funds. I think Blackstones and Brookfields and all those guys are going to do extremely well because of the flexibility, because of the scale that they have, and because of the knowledge that they have. Some of them are also comfortable to operate themselves. They built India teams, to do that. So it's very interesting, actually, of how India was just 20 years ago to where it is today and, where it's going to be in the next 10, 20 years.
I must say that my first trip to India was 2010.
Yeah.
And for those that say, oh, I know India, said, when was your last time there? And if they tell me 2012 or 2015, 16, I said, it's a different India. I should come again to India. You should travel to India again because it's absolutely true. Now, talk about these institutional investors, Aditya. My feeling, and I have been coming to India I would say 5 times per year for the last 2 years at least, 5 times per year. And at the same time, I speak to our members from, London or New York or Frankfurt or Abu Dhabi, is that there are a lot of them watching, observing, doing exactly what you said, that maybe they take a few years before they actually moving in. Do you see that movement happening at the moment? And the second question is, do you think the fact that we don't see a large number of newcomers in terms of institutional investors actually deploying capital, there's solid amount of money being deployed, of course, but do you think the reason why they are delaying the decision, that's my feeling at least, is because the global environment with wars, with trade wars, with actual wars as well going on, do you think that's the reason, or do you believe that is actually much more competitive now to deploy capital here than it was 10 years ago, and now the domestic capital here, the REITs and everything else, is a strong competition against foreign capital?
Look, I think there are two sides of the coin, because on one side, you are seeing some of these Japanese companies and newer funds that are coming in with capital who are ready to deploy in India, who are comfortable, and some of them are even doing it themselves, like I mentioned, which is quite interesting. And then on the other side, you're seeing emerging markets, kind of being a big question mark for people. Should we be deploying money here? Are we chasing higher growth here? When rates are on their way down in the US, there's so much tension around tariffs and the overall atmosphere, global geopolitical tension that's happening. So I think it's interesting to watch how it plays out. We haven't seen significant large transactions in the last 1 or 2 years in India from some of these big funds. So it'll be interesting to watch how things play out. I do think India is going to be able to deliver that growth. Despite a small slowdown that we might see in the market, residential is tapered down slightly, but still comparatively to the rest of the world, I think India is an opportunity for high growth. You have to play India. It's been some of the biggest markets for the big funds. I think that will continue. And we as developers would welcome new capital into this country. I have to say we are a little bit capital starved. Financing is not as easy as it is in the West. A lot of people want to play credit. And when you play credit, I think it's tough to compete with the domestic funds that are here in India, who are able to offer a little bit more flexibility on payment terms, on rates, on MOICs. But I do think that, the proof of the pudding gets more proven. These funds will just continue and get more comfortable and take, land risk, take equity risk. And that'll be quite exciting for developers like us.
Now, if you are, let's imagine for a second that you are a global investor and you just landed in India. Where is the best opportunity? Is that related to a specific market or an asset class? Is there a specific strategy you would follow? How would you go about it?
I guess it depends on your risk appetite, but I would say that the residential market has been, not just the flavor of the season, but it's going to be the flavor of the decade. And I say that because I just feel that India has a massive shortage of housing. So does the most of the globe, but I just think, we build 5 lakh houses a year, new houses. We sell 5 lakh houses. And, if you think about how many million people are moving into cities every single, year, it's crazy. I think 32 million people. So the opportunity for housing is huge. The challenges of that is, some of these funds are unable to take promoter risk. With RERA, you have to actually be liable for some of the deliveries, and some of them are not so comfortable with that. And therefore, they kind of pivot to more lending, financing land, last mile financing, things like that, which can be a little bit expensive for developers. But because the growth is so high, it can also be used well with developers. So I do think if the regulations are more favorable to allow more foreign capital into residential, I think that'd be very, very exciting for the country, because the opportunity there is massive. If funds are more comfortable deploying money in residential, I think, you can create more supply, better quality supply, healthy for the market, I think, with the balance of RERA in there. And, I do think also commercial is interesting. I know office has been a big question mark for the whole world. Work from home is a real thing. I think something fundamental happened during the pandemic is people realize that you can actually work from anywhere. And I do think India's a little bit different for a few reasons. I think, one, the work that's being done here, I think requires you to be there. I think productivity definitely goes up. The fortunate, unfortunate thing is a lot of the offices are better than most of the people's houses. So and then if you look at how these MNCs, treat employees and the amenities they offer and the food, I think it's a great place to actually work. So I think people have come back into offices much faster than what you've seen in the West.
True.
And I do think that, office has lagged. Developers, including us, have kind of pivoted a little bit towards residential, and you're now seeing a lack of supply of grade A REITable office. And when I say REITable, it's single institutional owner, large scale, total business ecosystem where you have grade A office, but you also potentially have hotels and convention centers and food courts and, these tech parks, what we call in India. This is where the GCCs want to be. This is where they can attract the best talent. And I do think that there's a shortage of that supply being built in India, because people are just seeing higher valuations with residential. So I think rents will eventually catch up. Office rents have grown 5, maybe 6% year on year on year. Residential has outpaced that. And I do think now as the constraint on supply catches up, you will see that jump on rents on the ready portfolios. I think REITs will benefit quite a lot. And as well as developers who are continuing to build that grade A office will do well. So as a company, we're focused on both large scale office as well as residential. So I think there's massive opportunity for capital to come in and chase, both these asset classes, as well as everything else that's happening. The data center space is kicking off. Warehousing is something that's being built. It's going to take a little bit of hard work for people to actually build out that space before you can trade these portfolios. But macro trend that you just cannot fight, the movement of commerce online. So I think there's huge opportunity. Hotels has been, the last 2 years has been the most interesting asset class in real estate. Is, this again, the lack of supply has just made rates go up a lot. So I think hotels, everywhere across the spectrum, co-working or what we call flexible workspace is now 27% of the market. Totally new asset class, didn't exist 7-8 years ago, is come in and is now 27% of the market. Huge way to play that story as well. So I think it's quite interesting, the opportunity.
Very exciting. Let me ask you a final question here. Such an interesting conversation. I want to talk about any mistakes that we as an industry here in India could be making right now. Let me elaborate. Usually when things are going well, we just keep going. Things are going well. And if you look at the numbers in India, you said very well. Of course there's some, bits and pieces here, but overall is way better than when you compare with any other market in the world. Right now, we are exposed to many, many, many markets. And by far, India is the most exciting for me as well. I agree with you. But when everything goes well as well, sometimes we just missed some areas. And in 5 years' time, we'll be maybe sitting here having a coffee and we're going to say, you know what? Nobody saw that coming. Maybe it's nothing major, but maybe something small. That will say, you know what? Maybe there is a different way to look at this aspect.
Yeah.
Is there anything that will come to your mind?
You know, the nature of it is this happens in cycles, and they happen in cycles for a reason, because human greed gets carried away with, momentum. And I think the classic example is oversupply and price increase. And I think that will happen, by the way. It's going to happen. It's inevitable. And it's slowly happening. We're kind of in the midst of a residential cycle. You will see developers get carried away with price increase as well as supply. And price increase, they'd look at lands and, try to make the deal work by pricing the product much higher. I think then you defeat affordability. And then when you're actually selling, you're kind of scrambling because you can't sell. Supply as well, if you keep bringing out too much supply and demand can't keep up with it. And there's a side of it that's investor and as well as end user. And end user, is great because ultimately it goes to the person who's staying there. But the investor market is just buying, to eventually get an exit. And often it's just booking it, paying a little bit down payment, leveraging on it, and then flipping it. As that investor market gets carried away and keeps making money, they keep wanting to do more. But as markets turn, as you don't see that price increase anymore, potentially rates going back up, equity markets kind of tapering down. You're seeing slow earnings right now, and the Indian stock market is overvalued, I would say. People are pricing in a lot of growth that's, not really keeping up. And naturally, as the markets taper down, you feel less rich. And that has a correlation with people buying real estate as well. I think they complement each other. So I just think that, look, supply will catch up. You can't keep banking on, this continued momentum to go on for years and years and years. It will slow down.
It's okay. It's part of the
It's okay. It's part of the cycle, and there's opportunity with that, when the slowdown happens. So I do think that, there's also a story of consolidation that's happened. The top 10 developers have really reaped the fruits of the cycle. But naturally, there's also deconsolidation that will happen. New entrants will come in. The top guys get complacent. So they start losing market share and new people enter that, which will change things. If they're giving guidance of doing X amount of sales and bringing out X amount of supply, they can lose market share very quickly through just, not being on the ball. And I think that's a big risk that developers have to constantly have an eye on.
Aditya, thank you very much for such a overview, 360 overview of the market. You were able to articulate the vision from the foreign investor perspective, the domestic as well. It was very insightful. Thank you very much.
Yeah, thank you so much for having me.